Corporate finance practice problem using Excel. Warrant gain versus stock gain with the same investment amount. Get ready, it's time to take our chance with corporate finance. Here we are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, note that we're in the practice tab as opposed to the example tab. The example tab in essence being an answer key. We have the information on the left-hand side. We're going to populate that into the blue area on the right-hand side, comparing and contrasting the investment in stocks versus to the investment in warrants with the same investment amount, $3,965, meaning we'll be able to invest in more warrants or purchase more amounts or number of warrants than stocks, given the fact that the warrants typically will be cheaper. So option ones, we can purchase these shares of stock that are costing $65 and we want to invest $3,965. So how many shares could we purchase? We're going to take the $3,965 divided by the $65. We could purchase 61 shares of the stock, or we have the cost of the warrants are $23 and they allow us to exercise them to purchase one share at $40, which is of course less than the current purchase price of the stock at $65, but we'd have to buy the warrant too, which was $23. And we're going to assume that in the future the stock price goes up to $75 from the $65, having an impact on both the warrant as well as the stock price, and the speculation premium on the warrant will be zero at that time is our assumption. Let's first think about how many warrants we can then purchase if we have the same investment here of the $3,965 that we're going to be putting in, and we're going to say that the warrants cost $23 each. Then we could figure out how many warrants we could buy. Of course, we can buy more warrants than the stocks because, of course, the warrants are cheaper. Font group underline. This is going to be then our number of warrants. Number of warrants. If I warrant you once, I warrant you. Okay, so this is going to be 3,965 divided by the 23. That's going to be the 172. It's not even, so we're going to have to deal with some roundings. Clearly, you can't purchase a partial warrant, but we got to deal with some rounding when we go with these kind of comparison analysis, considering we have the same investment amount and different costs. So then we can think about, okay, the gain for the stock, if it was to increase to 75, is a fairly straightforward calculation. We're just going to say the new stock price or the sales price would then be the 75. It went up to 75, in other words, and the cost was 65 per share on a per share basis. So the gain per share is going to be equal to then the 75 minus the 65, or 10. Let's underline that, font group and underline. And then we're going to have the total gain on stock is we got $10 gain per share, and the number of shares we had was 61. So I'm going to take the 10 times the 61, and that's going to give us our 610. 610. So the return, if we think about it in terms of a percent return on the stock, we're going to pick up our gain on the stock, which is the 610, and then the investment, the original investment, comparing that to the original investment of the $3,965, that's going to be our return on stock, which is going to be equal to the 610 divided by 3,965, making that a percent number group, percentifying it, adding a couple decimals, underlining the 3,965 investment, font group and underline. So there we have that. Now, let's think about the intrinsic value of the warrants. So if we're on the warrants side of things, we're going to say that the new stock price at the end, so this is at the end when we're selling the thing, so the new stock price, let's just call it new stock price, is going to be equal to, we'll just pick up the same calculation here, the 75 versus the exercise price. The exercise price, the price that we could exercise the warrant for, is 40. So the 40, going to underline the 40, font group and underline. This would be the difference. So what we could then purchase the stock for minus what we could exercise the warrant for gives us that benefit of the 35. And then we have the number of shares per warrant, which is just one this time. So we have the same one. We can purchase a share for a warrant. And that's going to give us then our intrinsic value. Intrinsic value which is just simply going to be the 35 times the 1. So there's our 35. For some reason, I pulled that out into an outer column. Let's bring it in an outer column here just to keep it with the example problem. And then we've got the warrant value. So the value of the warrant is, we're going to pick up that intrinsic value. And remember, there's no speculation premium here. So we're just going to be picking up the intrinsic value of the 35. And then we're going to calculate the number of warrants that we have, which we already calculated up top, but I'll do it again here. It's going to be the investment of the 3965 and the cost per warrant, which we calculated up top. Same calculation we have there of 23. Let's underline that font group and underline that. That's going to give us the number of warrants. The number of warrants, which once again is the 3965 divided by the 23. I'm going to add a couple decimals there. Number group, couple decimals, just to make it a little bit more clear. So then we're going to underline that font group and underline, and that's going to be our warrant value for the multiple warrants we have, which is going to be the intrinsic value, which we're saying is equal to the warrant value because there's no speculation premium, times the number of warrants, which is the 6,034. So then we can look at the gain on the warrants, the dollar gain on the warrants here, which is going to be the warrant value of the 6,034. We may have some decimals there. We should probably be adding in. Let's add some decimals versus the cost. So the cost or the investment was the 3965 that we put in. Let's add some decimals just to make it even with regards to the decimals, font group and underline. That's going to give us our gain on the warrants, which is going to be equal to the warrant value minus the investment. Adding a couple decimals, number group, couple decimals. So we're at the 2,068.70. And notice that number, then the gain here is greater than the dollar amount gain for the stock, because we basically are thinking about the same investment amount, and we have that kind of leveraging factor that takes place with regards to the warrant. So notice we didn't exercise the warrant at this time. We just held on to the warrant. We're saying the stock price went up and comparing the difference between the warrant and just holding the stocks in general. And again, you got that leverage kind of component with the warrant. So if we take a look at the gain, the percent return, we're going to take a look at the gain on the warrants and then compare that to the investment. And let's add some decimals there. So we're going to take a look and compare it to the investment, which is here. And I'm going to add a couple decimals, number group, couple decimals. And this is going to be the return on the warrants, which is going to be equal to the gain divided by the investment. And we'll make that a percent, number group, percentifying it, adding a couple decimals. And then we're going to underline it here, font group and underline. So note here, you could see that because we had the same investment amount, once again, we were able to purchase more warrants, of course, than the stocks because the warrants were cheaper, but we invested the same amount, which allows us to see both in terms of straight dollar amount, the kind of leveraging component resulting in an increased gain versus the stock gain. And we can also see it on a percentage basis, the return on stock as a percentage. We calculated in a prior presentation, if we just had one stock versus one warrant, then of course you can see the same kind of thing there, but you can't see it on the dollar amount gain, because if you're investing in one stock, you're investing more money. You're investing the 65 versus the warrant, which is only the 23. But you can see it when you're looking at one warrant versus one stock, when you're looking at the percentage returns, and that's why the percentages, of course, are important to look at often.